Welcome to India Market Open on the very first day of the year, the very first day of the trading year as well. Happy New Year to all of you watching us early this morning. Happy New Year, Tamanna and Niraj. You've had a very exciting weekend in terms of a big interview, and of course you had an exciting last night, I believe.
It was an exciting last night. I went to sleep at 10:30.
Proud of you, Niraj.
In order to wake up on time. I thought, what are we doing really in the studios on the 1st of Jan?
Should we put out an appeal? Let's keep 1st of Jan market
Been trying
closed.
it for the last 15 years. Doesn't work.
So US is closed, Europe is closed, most of Asia is backed.
And most of India is also closed, apart from the markets.
From the market.
And us.
But it's supposed to be good luck to work hard on the first day of the year, and that is what we will continue doing.
Honestly, between us, you can keep the luck. Let's keep the first as an off, really.
Tamanna is buying us coffee this morning. That's it. That's what you need to do.
Because of the interview Samina mentioned, so yes, you have big interview that you will see on NDTV Profit this morning. We've spoken with Ashwini Vaishnaw. He's Union Minister of Railways, Communications and MeitY. So look at the kind of spends you're seeing in all of these sectors, and this is why it was very important to get his perspective on it. That's coming up on the show. But let me begin with what has been happening globally, because that is the important thing. So let's start with Wall Street, which took a breather on Friday's trade after a fantastic run-up for the last 9 weeks. So the winning streak overall continues. The US markets ended 2023 with 9 straight winning weeks. And just to give you a sense of how 2023 worked out for Wall Street, because when you see the fantastic run-up in the Indian markets, it's following a global pattern in a sense. So the S&P 500 was up 24%. In the year, you had Dow Jones up 13.7% and the NASDAQ up 43%. The push for the NASDAQ is the important one to understand, because it's jumped up on the promise of AI. Definitely a big theme to watch overall. Crude has had a bearish trend through the year. It's about 10% down if I look at it through the year. Whether it's a Brent or the WTI, it had a bearish trend. So two things are happening over here. One is, of course, the Israel-Gaza conflict has kept fears up high of geopolitically what happens to crude prices. But the United States in 2023 has become the largest non-OPEC crude supplier. That paradigm is shifting. Another big story to watch. Look at how the 10-year ended the year of 2023 below the 3.9% mark. What a volatile jump for that indicator, from above 5% at one point to below 3.9%. So we've had quite a ride, and we're looking forward to a positive start in the Indian markets as well. At least the mood is upbeat.
Yeah, but just that it's an interesting week because Indian GDP data comes out and we're coming off on the back of the Chinese factory data being much lower. So while everybody's hoping for 2024 to be a year of China hopefully coming back, the data at the end of 2023 hasn't been that strong. But yeah, I mean, it's an important point to watch out for as to what could happen in today's session at the start of the week as well. Remember, it's still the start of the new series, even though Friday was the first day. So, I mean, not the best of days for the benchmarks on Friday, but the mid-cap and the small-cap indices did have a good run, so that is actually a good thing. And which is why I think most people say that it's very difficult to call tops in a market like this, viewers, because when the market moves with the velocity that it is, despite the valuations, you then give up the battle of trying to time the top and wait for the market to show its hand. Remember, Wednesday we had a sharp crash. All of that got covered up. And we've had a really strong move, moving up all the way to 21,800, circa those levels, right? So don't call a top. It's very difficult to call that top in a market which has got such velocity to itself. The only difference is the last 3 or 4 days, I've heard some smart money now say that let's be a bit careful on PSU stocks. Now, why so? Because government hasn't still moved on disinvestment. And I don't know if Samina and Tamanna have some views here, but the government still hasn't moved on disinvestment. And if they do, then all stocks on which there is a possibility of the government stake likely to come down, whether it comes or no is separate. But typically moves like these tend to bring about upside caps to all the stocks which have that kind of a flavor to it. So PSUs have had a rollicking 2023 ever since the time Chinmay was giving me this data that ever since PM Modi used the term PSU revival in Parliament, the PSU index has gained 91%. all stocks with the term Bharat or India attached to it have gained 79% from that date. So there has been a sharp rally. If this disinvestment piece starts happening in Q4, because the government still hasn't done it and they will at some point of time, so that could be an issue for PSU stocks. I found that interesting and it's worth monitoring for sure. And lastly, actually two things in terms of sectors. One, when people, and I spoke to 3-4 dealing room people over the weekend about what could move and what could not. So two things at opposite ends of the spectrum: power and specialty chemicals emerging as sectors to watch in the near term, and they're at opposite ends because power has had a fabulous 2023 and chemicals haven't. So can power and chemicals actually shine together? That's the point. And lastly, some data that I pulled out, guys. Real estate index. This is interesting. I mean, it's just anecdotal, but it's interesting. 2017 real estate sector index was the best performing index. 2018 it had a negative year. 2019 it was one of the top 3. 2020 the weakest performing index. 2021 53% uptick. 2022 negative. 2023 it's the best performing index with 76% gains. Can it have an off 2024? I mean, it's just anecdotal, but it's fun data.
Indeed. You know, Niraj, you talked about PSU stocks, and if you look at the PSU index itself, that has been the top performing index of 2023. 75% gains is what we're talking about. And you talked about stocks that were neglected, sectors that may not have participated. And I saw this data that came in. So from the last week of December, which was a holiday shortened week because of Christmas, the market cap of the 8 out of 10 most valued firms, so your HDFC Bank being your top gainer, has added about 1.29 lakh crores in one single week, which is 4 trading days. So the large caps, like we've been talking about this for the last few months, are finally playing catch up. That coincides with the fact that FIs have been slow for most part of the year, but December saw the largest number of inflows coming in from FIs, and that was just over 66,000 odd crores, highest ever historically. 10 days ago, I know that number was out of the best in 3 years, but now that, of course, is the best number we've seen for foreign investors. So FOMO played out. DIs might have lifted this market for 11 months, and they have, I believe, contributed 1.85 lakh crores to Indian equity markets. FIs are slightly far behind, but at 1.7 lakh crores is what they've invested in 2023. Now, a quick recap in what this year has been. It's been a great year, to say the least, and I'll just take you through a couple of numbers and we'll talk about looking ahead what January is going to be like for the markets. And I guess there is...
Yeah, you have a bit of a fan in this
in the studio. If not, you're too bonkers.
In form of a fly. Yeah, sorry, the fly's gone away now. So yeah, just to quickly take you through that. Valuations, Niraj, and Tamanna looks stretched. The Nifty large cap is trading at a 20.18 1-year forward versus an historical 5-year average of 17.8 times. Mid cap is at 27.63 versus a 21.48 5-year average. Small cap is at 21.64 versus a 5-year average of 15.5. So we've talked about this, that the markets do look expensive. There is a little bit of froth. Numbers now are, for all of us to see, they look a little stretched at this stage. Now, just to quickly take you through what we are expecting in Jan, and again, we've talked about this for the last couple of weeks, but just to put numbers to that, out of the last 10 years, January, 7 out of 10 years has actually ended on a negative tone for the markets. In fact, from the period of 2019 to 2023, they've gone home with negative 0.6 returns to 2.5% gains. So it's been a wide range, but literally ending negative as well in a few months. 2015, 2017, and 2018 were the only months in the last 10 years that saw markets end on a positive note. And if you look at rollover data, and I think this could be a little concerning, right? We've seen very, very bullish rollover data. So Nifty rollover Jan premiums are on the 27th were at levels of 199.35. On the last trading day of the year, that number came down to 135. still uncomfortable. This number really indicates that traders are willing to bet and roll over their giant position. So very, very bullish sentiment is one way to look at it. Wix has seen a jump of nearly 35% from levels of 10.8 to a closing on 29th December at levels of 14.5. Now, my only concern, Niraj and Tamanna, on this is that while it all looks very, very bullish, margin of error is very low at this stage. So one excuse, and the markets will not take that very well, because if you've got rollover premiums at 133, you've got the Wix at 35, which has seen a jump, and historically markets have seen profit taking. And also we are coming out of a very, very solid December and Jan. And of course, the joker in the pack is earnings and crude. So I don't know. I'm not trying to curb expectations here, but it looks like we are in slippery grounds, at least for this month.
So I would say two things. One, that maybe there will be a bit of a breather before the elections and around the budget. Could it be seen as a buying opportunity? And we're going to be talking more about the 2024 outlook in the editor's cut in a minute from now. And just on the PSU bit, I just wanted to add some perspective. This government is very, very clear that they want to revive as many public sector enterprises as possible.
Goes without saying.
Before July next budget, before you have a new government and, the expectation is the same one pack, there is going to be no move in a big way on disinvestment.
But there's a disinvestment target, right?
There is a target, but the target has been missed and
so which is why it's something that people are watching out for, Tamanna.
So it's not the highest priority politically or policy-wise, it's just the simple point that I'm trying to make. The biggest priority is reviving companies. I mean, there's talk of reviving a BSNL, for example. That's the kind of push that is being looked at.
But the two are disconnected per se, right? You can still revive PSUs while you want to do the disinvestment. So it's interesting. That's the point people are making, that it's interesting that because they haven't made a move thus far, who knows, they may or they may not make a move. But if they make a move, then the PSU stocks going to have a cap. I mean, it's an interesting thought to keep in mind.
Absolutely. But let's talk about
and a lot of that
the
is already priced in, right? Everything's running ahead of itself. At least that's what we've seen in 2023. Yeah. It's not about what's going to happen anymore. It's almost as if it's happened. And you want to finish your flows, and then I'll quickly come into stocks.
No, so flows you sort of covered. You sort of covered the flows, and I think that was very important. FPIs bought massively in 2023. On Friday, they bought about 1459 crores. DIs bought 554 crores. But I think the annual figures is the astonishing one. Will they continue to invest in India? The large answer seems yes. But I think we should come to the stocks for the day.
Yeah, and I think I want to start with BHEL, and both of you should weigh in on this one, because this is, Niraj just called it the stock of the day. So we will talk to Niraj about this stock, and Tamanna, of course, because you've got a little bit of insight on this whole electricity space as well. BHEL turned out to be the best bidder for a 19,422 contract for building a thermal power plant in Talbira. The building thermal plant power they're going to be building this for NLC India. The timeline for completion is 5 years. Remember, as of September, BHEL's order book stood at 1.14 lakh crores. I want to talk about BHEL with both of you, because there was a report that Kotak put out recently saying that BHEL and NTPC may be overvalued at this stage. They're calling it the curious case. The stock has done up substantially in the last 6 months. What they do say is that the market is willing to give multiples to a limited period or limited opportunity earnings, which is a clear violation of any reasonable valuation framework. Of course, they're saying that the time horizon is a limited opportunity, right? NTPC may not look as stretched, but BHEL in the last 6 months is shocking, to say the least. And of course, the orders are coming in. This is 10% added to the order book, 10-12% from where they stand. But both of you, any thoughts on that?
No, just so one, of course, these are news reports, of course. NLC hasn't put out the official confirmation, but the news reports suggest that they have won this. And if they have won this, I think Samina is dead right that while the book-to-bill ratio looks solid, and Anushi is going to talk about it in detail as well, but just the fact that the last 2 quarters, BHEL's margins have declined abysmally. Yeah, the operating performance has been shabby, but the book-to-bill ratio is tremendous, and maybe that is what is getting the street excited. Just one last piece in terms of numbers. As of September end, it was 1,14,000 crores. The company does about 25,000 crores worth of annual revenues. Even if you assume that they've done another 7,000 crores in Q3, their order book still stands, presuming this order is included, is about 1,30,000. So the book-to-bill ratio is northwards of 5 times. which is very strong for BSE.
Absurd, almost.
So it helps visibility. Now, can they improve execution is the key thing.
No, and I also think, again, I'm quoting this report. So this is coming in from Kotak, where they've said that BHEL would need to deliver BTG, which is boiler turbine generator equipment corresponding to 18 to 26 gigawatts of new thermal generation supply every year in perpetuity, even using low multiples in the reverse valuation exercise. So it's curious, it's absurd, but the stock has done exceptionally well. And if it's anybody's guess, the counter will react positively to this contract being won as well for Taliban. We will watch out for it. Could be a gap up and may continue to strengthen even on a day when volumes and trade might be subdued. Another sector that you want to keep an eye out on today is going to be the auto pack. Some of the auto majors will be reporting numbers. It's not expected to be a very exciting month, but nevertheless, you've got the likes of a number of two-wheeler companies that will be reporting. We will, of course, track that as we go along through the day. But you guys just want to add to those stocks before we move on to it.
Just a couple on my list. One is Imami, because it has an interesting report out from MK. So I'll just talk about that. They've given a buy rating with a target price of 625. They've said there's been a 13% up move last week because of valuations, and this season is typically good for the products of this company. So the winter-centric profile will add to the top line. 625 is the target price that MK has set. So that might be one to watch out for. Dalmia Bharat, another one, very quickly. Motilal Oswal has given a buy rating, target price of 2,800, so some upside over there as well. The company has underperformed so far, the index and cement stocks. So will you see some kind of firing over there? And the underperformance is due to a delay in acquisition of JPA assets, though this brokerage report is optimistic on long-term values. I'll just mention perhaps Alchem. So Alchem Labs, with a bit of news today, it's sold its St. Louis manufacturing facility in the US to New Mill Capital Holdings for about $8 million. Niraj, what's on your list?
No, just by the way, just very quickly on Dalmia Bharat, Nomura gave out a report last week as well, upgraded the stock. And remember, cement data expected this month is likely to be strong, so that could add to Dalmia Bharat. I'll make it very quick. The Hycle could be in focus. The Gujarat Pollution Control Board has imposed a fine of 17 crores. Now, usually this is not a very large fine, but Hycle has been the eye of a storm with regards to regulatory processes for a while now. So maybe it impacts the stock today. And watch out for the delivery-based buying data into a few stocks. Surya Roshni was up 19%. Stocks marked for delivery were 5 times the stocks marked for delivery on a 5-day average. And the other two is Olectra, Greentech, and Railtel. Olectra had a big move, 8%. News reports suggest that one of their facilities has started operations, and that might help execution for Olectra. So that stock did well. And Railtel, we have a management call today as well, but that was up 15%. Well, Railways is in focus because of the big interview today. We're also talking to ABB on Railways and other things today at 9:30, by the way. But yeah, Railtel Corp certainly in focus, so that's the other stock on my radar. Okay, guys, very quickly, anything else?
Earnings. So TCS will report on the 11th of Jan. So there will be a little bit of excitement towards the end of this week before we go bang into the earnings season. That is clearly going to be the biggest trigger, I guess, for the month.
Yeah, well, and we'll talk about the month and the year on Editor's Cut as well, because about time that we move the focus there, and it's going to be an interesting conversation. We'll try and make it snappy, viewers, but let me and Tamanna join our colleagues Murli and Vishy on the Editor's Cut for all of you who are tuning in on the first day of the new year and want to understand what the Editor's Cut is about. It's a summation of the key points that the key editors at NDTV Profit believe are worth mentioning in slight more detail. Now, with your permission, ladies and gentlemen, Happy New Year to you. But I'll just kickstart this with what is in store for the markets, because that's what we are trying to do today, try and talk about what is in store for 2024 from multiple angles. Markets, politics, economy. Now, let's start with the markets, if you will. Or should we start with the economy, because that's the big thing?
I think start with the markets.
Start with the markets?
Yeah, that's the focus.
Okay, cool. So let's make this quick and talk about what is it that people should be focusing on when it comes to markets. I'll just... so remember, 2023 was a big deal, right? From markets perspective, 20% returns, circa 20%. Dollar terms, about 18% for the markets at large. But mid-caps and small caps did even better. The only interesting thing that I saw in the mid-cap performance was that if you look at 2023, positive return, yes, but the index did much better than individual components. 14 stocks outperformed, 36 stocks underperformed the index. So it was not, I mean, yes, everybody gained, right? If the index has gained 50%, you've gained 40%, your portfolios will look strong. But 36 stocks underperform the index, mid-cap index. Can that change in 2024? I think that's the one big question that people should be thinking of. Now, what are the key factors for 2024? From a world perspective, performance of the US and the Chinese economy, particularly the Chinese economy, because it needs to make its presence felt. Somehow, the data is not suggesting that. So unfortunately, that jury is out. But can the US do better than what is anticipated? Because that might just help, amongst other things, the IT sector. So that is one thing to watch out for. The Fed interest rate cuts, arguably the most important talking point. I mean, central banks are driving markets since 2020. Yeah. Can they do it yet again in 2024? So that's the other key thing. The economic implications of the Israel-Hamas war, and if it spreads out in the Middle Eastern region far and wide, can it have economic implications as well? Because Israel-Hamas contained to that region, but if it spreads out, it's a problem. I can see Tamanna to come in. Give me a moment. But yeah, and the potential South China Sea conflicts. Now, if that were to come about, that is arguably the really big deal amongst all the geopolitical conflicts in the minds of the market, I would presume. Global output will likely slow in 2024 as the higher interest rates snuff out economic activity. So that is a given. But India's role as a global production hub, can we actually strengthen that? Because 2023 was a lot about news flow and intent, not as much as expected. But vibrant Gujarat, in a few days from now, will we see some commitments, some execution there, and can 2024 see that? And lastly, very quickly, I'll move to the key debate, large versus mids. A lot of conversation about why this is the year of large caps versus small and mid caps. Let's wait and watch if that turns out, because large cap valuations, TTM basis, Samina highlighted 1 year forward, 20 times and it's expensive. TTM, 23 times, which is really expensive. It was not expensive in September. It's become expensive end of December. Large caps as well. Mid caps we know are terribly expensive, so no point talking on that. And possible themes, all of you, for 2024. People still talking about capex cycle beneficiaries because the combination of core sectors, green growth and PLI, all of them might weigh in. So capex cycle beneficiaries, cement, and we'll see some data, but if utilization levels pick up, then that's a sector to reckon with. Banks, even though there is NIM contraction, can banks really perform? Because they haven't done that in 2023. Could it be a year of large cap banks? Third, real estate. We just did a small fun piece also of why 2024 might not be the year, but who knows, it's a decadal theme. So maybe it still does well. And premiumization across sectors, across themes, I think to be watched out for.
Yeah. I would say also infrastructure spends. That's what's moving the economy as well. And you want to come in on that, Vishy, because you're giving the economic outlook. So government spends and government infrastructure is what has been moving the economy and will continue to do so.
That's right. So at this point in time, a lot of the infra spending is being front-loaded by the government. During the last budget, they said about 10 lakh crore. That's overall on the infra spend. So that's continuing as is. I know in your interview, I heard the railway minister talk about 77% of our
He's already so just quick context there. So 2.4 lakh crore rupees, which was allocated last budget, was one of the highest allocated to the rail budget. He's already spent 77%. By March, he would have spent all of it. And he's saying that I need between 2.4 to 2.6 lakh crore over the next 5 to 7 years to complete what we've set out to do. That's a lot of money coming into the economy.
That's right. So even when you talk to the bankers, they're all saying this, that private capex is now starting to come in, but government capex is still driving everything. So once that private capex starts picking up to levels that are more sustainable and high, that's when you see the sudden spurt in the growth rates. Is what we can talk about the infra bit. Overall, in terms of growth, the expectation across economists is about 6.5 to 7%. The RBI has already changed its forecast. That was on December 8th when they did the policy, on launch day. They said that we're going to revise the growth forecast to about 7% for FY24 and by another 10 bips for FY25. Largely, this is being driven by the stability, political stability that we have in India. There's digital public infrastructure as well as the overall infra spending. On the digital public infra bit, now this is something that we broke just a little while ago, which was that the RBI has breached the 1 million daily e-rupee transaction target that they had set for themselves for 2023. So that was breached on December 27th. This is something that the RBI governor told the employees at RBI in a letter on Friday, is that this daily target has now been breached. Of course, he's also pointing out that we have been very good at maintaining or managing all these challenges that faced India. Of course, India growth story still remains intact despite a sort of not so great looking global scenario. If you were to look at, let's for example say inflation, which is one of the big challenges facing the global economy as well as India, we are still far from the 4% target that the MPC has set for itself. However, there has been a deceleration, apart from maybe a temporary boost in food prices that comes in here and there. But overall, inflation has been on a lowering trajectory. But unless it hits 4% or is at least at a sustainable level around 4%, you don't expect any rate cuts, because that's the other big boost that will come in for the economy, which is rate cuts, which is not expected at least till the second half of the next financial year, FY25. What we should also look at is banking sector liquidity. That has been in deficit for the last 2 to 3 months. 2.7 lakh crore, that's an all-time high liquidity deficit that continues. And because of that, without the RBI raising rates, automatically real interest rates start going up. Yeah. So that's a problem that you have to watch out for. Lastly, on the rupee front, the RBI is heavily intervening as far as the rupee movement is concerned. They don't allow any volatility. We wrote a story this morning which suggests that traders are starting to take up risky trades because there is just no movement in rupees. So you can bet on riskier bets and maybe make some money. The story points out that on the 29th of December, there was a lot of open interest for forward options on the dollar rupee pair, and people made money on that because they were targeting for an 83.25 cutoff, and the rupee closed at 83.21. So that was like a big boost for that. These kind of things will keep happening, and crude oil becoming the big shock point. If it suddenly spikes, that's a problem.
Okay. So watch out for these points as well. Now, should we do political, or Murli, you want to weigh in with some things that you had in mind?
Okay, yeah, no. So basically, I had these thoughts on Friday itself, but the party was going on, so I didn't want to spoil the mood. And I think the party has ended yesterday. You know, after the party ends, I think we need to take stock of the reality. What is the reality? I'm not trying to spoil the party here. You know, I'm trying to only caution. 2024 is going to be a very clear year of caution, consolidation, and correction. Now, how and when will they happen, we don't know. We'll have to wait and watch. But there are 3 risk factors that I see. A risk as in not risks in terms of reversing the trend. The risk could be because of short-term shocks that will come. It will last for 1 day, 2 days, or even 3 days. Now, what are these risks? The first one is the rate cut and the shift. So, if the rate cut happens as expected, if the Fed cuts, say, sometimes say in June or July, some people expect it in March, then there could be a shift in money allocation between assets, between different assets and different geographies, money moving in and out of EM and DM, that is emerging markets and developing markets. That's one. But if there is a delay for some reason, because we still don't have clear cut message coming from the Fed that it's going to come in June. It's the market which wants to see it in March, it wants to see it in June. But what if the gap between, see, the gap is still quite substantial between the Fed's target and the actual inflation. So that's one risk. Watch out for that one. If there is a delay, there could be a change in the narrative. That's first. Now, back home, as Vishy was pointing out, 2 factors. There seems to be excess money in the system. You know, that excess money, we don't know how it is coming in. One assessment, like the RBI did, was to know that the money is coming from the banking system in the form of personal loans, unsecured loans, and getting diverted. SEBI intervened, and RBI has put a stop now and then. Now, we will see more and more of such actions coming in. And secondly, as you pointed out, Vishy, the rate cut may not happen for the next 6 months or 7 months. It might happen in the second half, because RBI is very, very clear that it does not want to let inflation run out of its control. That's the second point. The third one, the most important one, the political one that you are going to take up a little later, is the full budget in July, sometime June and July. Let's assume it's July. Now, what will this budget give the markets? In my book, nothing. The markets will love the euphoria, the markets will love the noise, but then what will come out? See, in any case, all the GST rates are set outside of the budget. Only lofty targets will be set, lofty ambitions.
So you're talking about the Feb budget or the July budget?
July budget, not the Feb budget.
Okay.
July budget. See, July will still we'll talk about trillions.
But shouldn't a budget, Murli, be any which is that, a statement of accounts as opposed to giving targets?
It builds up the kind of euphoria. It builds up the kind of hope.
So you're saying there might be euphoria before the budget and that might get spoiled?
That might flatten out. Okay. So therefore, if you're buying, if you're targeting investing, you need to be very, very cautious. See, all of us know that it's going to be buy on dips market very clearly. You can't. Can you buy and make money the way you bought last year? So today, if I close my eyes and put my pen on any of the stocks, it would have gone up by 20, 30, 40%. Can I do that in 2024? Certainly not. Okay. So therefore, viewers, one very thing is, do not fall for slogans. I'll call them slogans like "Ab ki baar." 25,000, 23,000, all those things are.
We started with 50,000.
50,000. So these are slogans. Make an assessment, look at the real situation, be cautious, and every step that you take, the next step that you take should be measured, should be considered. Yeah. That's my suggestion.
And that's what we are here for, to help you
Absolutely.
On NDTV Profit every day. Now, so just what I wanted to point out is that why 2024 is going to be a very exciting year. So now coming into the end of the year, the biggest risk factors have sort of ebbed. Whoever was talking about a US recession, most of them have quietened down. Yeah. Those fears have ebbed. Indian political stability is there. But what is that sort of cloud on the horizon that you need to watch out for? So a couple of things that we put together. One is that there are two wars which are going on right now as we speak. So those two wars are on. You have the Israel-Gaza conflict, which hasn't ended. Everything that you're seeing in the Red Sea, including last evening, a news report that Houthis are still attacking ships. Maersk has said it's not going in the Red Sea anymore with drones, missiles, all of it, and in retaliation for what Israel is doing in Gaza. So that is on. Will it spread? We don't know. We've not been talking about Ukraine, Russia, but that conflict is very well on. I just want to add what has happened overnight. Xi Jinping, in his New Year's address, has said that a united China is inevitable. His eye on Taiwan is very much there. You have an election in Taiwan in the next couple of weeks, and the front runner right now is someone who China doesn't like. You need to watch that space. So I'm just placing for you where those concerns can come. Also, 40 nations are going to go to elections just in 2024. 40 nations, and this is some Bloomberg data that I'm citing, that's 41% of the world population will vote on their futures in 2024. It's momentous in all regards, but definitely impacts what happens to geopolitics, the markets, the world. So we don't know whether it's going to be a Trump return. Does Biden come? Is there an X factor there? Everyone is assuming that, the Indian election outcome is set, but it is at the end of the day an election. And I don't even think the ruling party will be sitting with its eyes shut, waiting for what happens in May. So those are things to watch out for. Some very crucial nations are going to the polls, and I talked about Taiwan, but there are others as well. So those are some of the big risks that you need to watch out for, that how do people vote. And the other small one, I know nobody likes to hear it, but COVID, will there be a new variant? Hopefully not. We're all vaccinated, immunity has improved, but you need to keep that always on the horizon. So this is what could spoil the party, but largely, since we've all played out the risk, the fact is that right now it's looking good. Sitting on 1st Jan, it's looking good.
Yeah, and which is an important assessment as well. So good. There is a bull and a bear case laid out for the markets and world at large, and that's what we aim to do. But we are out of time on Editor's Cut, so all of you, I'm glad we did this, but time for a very quick break. And up next, we full tilt towards the day's trade, starting off with Agam Vakil, who joins in to help us with the derivatives setup. Stay tuned to NDTV Profit.
ambitious plan, you have a big plan. Do you have the capability within the country available in the private sector to execute it?
Absolutely.
Because that's where we get stuck in execution.
Absolutely. As I said, out of the 2,40,000 crore capex budget that we have practically done about 70% by the end of December. Or actually it is 77%.
Okay.
It's of that order, 74 or 77% of that order, right? That's possible because there's a huge ecosystem which is supporting the entire execution. Methods have been changed. PM साहब का हमेशा एक फोकस रहता है बारीकी से चीज़ों को देखो और उसमें रिफॉर्म्स करो. काम करने का तरीका, कॉन्ट्रैक्चुअल स्ट्रक्चर कैसा है, डिज़ाइन की कैसी कैपेबिलिटीज़ है, सुपरविजन कैसे बेटर होगा. बहुत प्रैक्टिकल चीज़ है. लैंड एक्विजिशन में रिटायर्ड पटवारी को रिटायर्ड तलाटी को लगाओ, राइट. इस तरह की जो प्रैक्टिकल चीज़ें हैं उसके कारण आज कंपनीज की कैपेबिलिटी भी बढ़ी है, काम करने की ताकत बढ़ी है उनकी. And many of the design companies are on a hiring spree. They are like increasing their headcount every month. You talk to them and they are saying that we have added so many people, we have added one more center. So that's second. There are some very serious technology companies in our country. Very serious technology companies which do not have to depend upon importing technology. They are capable of developing those technologies in the railway sector, specifically I am saying. And railway की बहुत सारी adjacencies होती हैं. Once you have a railway technology, that straight away goes into marine sector, that straight away goes into power generation sector, that straight away goes into defense sector. बहुत सारी adjacencies होती हैं. उन adjacencies को भी, for example, जो अपना रेलवे के लोकोमोटिव में पावर ट्रेन होती है, that same power train can be used for running a submarine.
back. You're watching India Markets Open. Let me quickly go across to Agam, who's setting the stage of what we're going to see in the F&O segment today, the start of the new year.
Yeah. And it's been a quiet one so far, Tamanna, and that's exactly what we're expecting today as well. Because as far as Friday's trade is concerned, we really didn't see too much traction, and that was perhaps on expected lines because, well, a lot of participants perhaps were on holidays. But as we come through on Monday, well, we haven't seen too much in terms of position building because we've seen a little bit of decline in open interest as far as the index futures go. And in terms of the bank Nifty futures too, we really haven't seen too much traction there. Another 0.5% decline in open interest, even as the underlying declines by a little less than 0.5%. What are the option markets telling us at the moment, at least as far as the Nifty goes, considering we saw a little bit of consolidation going on the benchmark on Friday? We did see a little bit more writing around the 21,500, 21,600 puts. And on the higher end, we're starting to see a little more resistance building around the 22,000, 22,100 mark. And that actually brings us to the kind of range that we can expect, at least based on maximum open interest. So for now, max OI stays with 21,500 put. And on the higher end, it is the 22,000 call. And that's the 500-point range that we're potentially going to work around with as far as the Nifty is concerned through the course of this week. Very quickly, let's talk about the big movers on Friday. And we did have a lot of traction in Nalco, Balrampur Chini and Samvardhana towards fresh longs building in. Some shorts building up as far as India Mart Intermesh goes. In terms of those stocks which saw unwinding, we did see about a short covering for Hindustan Copper, Torrent Pharma, along with L&T Finance. That's as far as the stock markets are concerned, but let's get an expert to understand what he makes of the markets and how he is placing bets. Well, where we have Ajit Rambhia of Ajira Ventures who's joining us on the show. Ajit, good morning and thank you so much for joining in. Let's start as usual with your view on the markets. How are you placing your bets here?
Good morning, Agam. A very happy new year to you and all the viewers of NDTV Profit. Talking about the Indian markets, our view is cautiously bullish. Since both Nifty and Bank Nifty have shown strong positive trends, we would like to continue our bullish trades. As far as Nifty is concerned, we would continue our bullish trades with a stop loss of 21,500 levels, which was a resistance a few days ago and now acting as a strong support. Similarly, in Bank Nifty too, we will ride our bullish trades in Bank Nifty with a stop loss of 48,000, the resistance turning into support. Like this was the previous resistance and now both the levels are turning into supports. One sector that has been catching our eyes is the re-rated PSU sector. We have seen significant transformation and renewed interest from the market participants. It might be a good idea to keep an eye on these companies. However, with this optimism, it is crucial to be more cautious. We highly recommend to buy appropriate puts along with these bullish setups and hedge your buy positions. We urge the viewers to do their smart risk management and safeguard their positions against any potential downturns. Finally, as we move forward in 2024, let's remain optimistic yet pragmatic, ensuring that we have our safety nets in place.
Absolutely. Well, remain optimistic as far as markets are concerned, but also keep some caution in mind and hence hedge your long bets at the moment. That's the view that's your overall view when it comes to approaching markets over the course of the next few weeks and months. Ajit, let's talk about trading ideas and let's start off with your view on IEX.
IEX, it is around 168. We have a butterfly strategy installed in it. IEX is a trending counter. It has given a fresh breakout. Strategy for IEX is like we buy one ATM call of 170, which is at 9.35 rupees. Against it, we sell two out of the money calls at 180 at 6 rupees, and again hedge the same with one OTM call of 190 at 3.60 rupees. The cost of this strategy is just 95 paise, so the maximum you can lose is 95 paise, and the maximum profit you can gain is 9.05 rupees. So risk to reward is around 1:9. So very minimal to lose, and you can gain due to the bullish stance in it.
Right. Okay. Very quickly, if I can explain the strategy of what Ajit has been talking about, is that at the moment IEX is at about 169, 170 odd levels. He's expecting IEX to move towards 180 towards the end of the January expiry. But he is not expecting a tremendous upside. He perhaps is expecting a little bit of consolidation after IEX does move higher up. Based on that, what he is betting on is a partial up move and then perhaps a little bit of consolidation towards the end of January. And hence, that's the reason why he is selling 280 calls. And to hedge that particular position, he's buying in the money or around at the money call, and also buying another at the money, out of the money call. Now, the risk to reward ratio, as Ajit already mentioned, is 1:9. And should IEX expire at 180, for the 1 rupee that you're putting in, you could potentially make as much as 10 rupees in this particular trade. Ajit, if this is as far as IEX is concerned, can you take us through your other strategy on Nestle as well?
We have a bullish view on Nestle. Nestle has declared a stock split of 1:10. So every 1 share held of 10 paid up will be converted into, say, 10 shares of 1 paid up. Generally, whenever we have such a stock split, the share is re-rated and we see the stock prices going up because of the enhanced liquidity. So looking at the bullish stance of Nestle, we recommend a bull call spread whereby we buy 1 call of 27,000 at 520 rupees and again sell 1 call of 28,500 at 167. So the cost of this strategy is 353 rupees and the max gain that can be earned is 1,147 rupees.
So there's a, yeah, please go on, Ajit. Please finish.
Yeah, so just for a mere 360 rupees, you can bet on 1,500 rupees that they're going to come.
Okay. Right. So the strategy as far as Nestle is concerned, once again, and this is where a little bit of convexity plays as well into your favor if you actually, in fact, see Nestle move up higher. In this case, this is, again, a limited risk strategy. This is, in fact, a debit spread that Ajit is placing a bet on. That means that you will pay a certain amount, but should Nestle go up higher and, in fact, continue to move, well, we are actually likely to make 3 rupees for every 1 rupee that you make in terms of gains. Ajit, the question is that you're positive on Nestle and you're positive on IEX, but why is it that you're playing a butterfly on IEX and you're playing a debit spread on Nestle?
IEX is generally a slow counter and it is a trending counter. It generally goes slowly. So we have a target of 180 for the month end. So we should benefit from our target prediction and minimize the cost of the strategy. So just by paying 95 paise for the whole strategy, we can earn the full thing. So that's why we have placed butterfly over here. In Nestle, we see a full-fledged bullish trend. So we don't want to risk our upside, and we want to gain the 1,500 points that are clearly seen on the table.
But we must remember that a debit spread in this case is very much like a futures. But while in futures, your theoretical risk as well as your upside is unlimited, when it comes to a debit spread, both your upside and your downside is limited to the kind of strategy and the kind of strikes along with the premiums that you're placing. Well, Ajit, on that note, we're going to take a moment to thank you for taking us through your views as well as ideas in the market, specifically options in this case. And with that, Samina, it's over to you.
Thank you, Agam. And of course, those are option strategies for all our viewers in today's Day of Trade. GIFT Nifty, we'll quickly check out what the indications are this morning. It is expected to be a subdued start. Don't expect fireworks or massive volumes on the very first trading day of January 2024. We have with us 2 special guests joining in to talk to us about their outlook on the markets and strategies for the day. CK Narayan, founder NeoTrader Growth joins in, and we've also got Aditya Shah, founder of Hercules Advisors. Morning, gentlemen. Thanks a ton for joining in. CK, I'll come to you first. We're coming out of a very, very solid 2023. A couple of data points that I want you to elaborate and explain to our viewers what this really means going into January. Firstly, Jan in the last 7 out of 10 years has actually historically been a weak month for traders, or rather for bulls. Secondly, we've seen the VIX index jump quite sharply from levels of 10 to almost 15, so 35% jump in the last 2 weeks of December. Apart from that, your rollover on Jan futures was at a premium of 199, I believe, came off a little bit to about levels of 165. All of this indicating extreme bullishness, which also means there's very little room for error, right, or margin for error. How do you view the Jan series? Would you be constructive on the long side? Would you be conservative? Would you stay on the sidelines?
Good morning. Happy New Year to everybody.
Oh, yes. Happy New Year.
I'm most certainly not staying on the sidelines. That is for sure. Because I do believe that there's great momentum currently in the market. There are great stories which are going around about India, which there are absolutely no reasons to disbelieve, because we are seeing the facts on the ground, as it were. And the markets have been consistently rewarding the buy the dip approach. So when the market keeps rewarding buy the dip, it means that the general, the general set of traders, investors everywhere out there are willing to chance their arm, and they are willing to put their money to work, no matter what the surrounding set of news is. So sentiment being upbeat, it'll generally tend to override any of the other problems which actually come up. Now on to your point that Jan, for a lot of time is down. It's actually, if you compare from 10 years, you expand that to 20 years, that number still stays pertinent, and actually it increases in the sense that Jan is a softer month. But you have all sorts of data. You have, let's say, 2008 as something like around 14% decline in the month of Jan itself, or about 12 to 14%. But you also have 2012 as something which gained 12% odd. So if you really look at it generally across, let's say, a 10-20 year period, you can put the average to around 5 or 6 odd%. That will be the average, because there were many rising months and there were many stationary months also. Now a 5-6% pullback in the market is nothing out of the ordinary in the light of a 20% gain for the year, right? So we should respect history, and we should respect the cyclical patterns of the market, and I'm a great fan of that, by the way. And I think given the sort of way we have reached into Jan, and that people will be setting up new positions across the year, particularly long-dated options, all the FI traders and the India-specific funds buying protection. All that thing will happen in the first month of the year. So we might see some amount of pause, undoubtedly, and that is what the cycles are also pointing to. So it would not surprise me to see a reaction in the market at all, but which will leave the trend largely undisturbed.
And that's healthy, right?
Of course it is. Any correction is healthy.
There is a little bit of risk at higher levels.
No, it's healthy at two levels. One is that people have been afraid of the heights for the last 6 months, right? So it finally proves them correct. So they are happy. Second is then it also gives you a chance to buy things at a lower price, and there's a whole lot of money waiting in the wings to kind of enter. So from both angles, people are happy with the correction.
It's a win-win.
Yeah, absolute win-win.
Aditya, how do you feel? Fundamentally, there is a lot of talk that there's a little bit of froth in the broader markets. I mean, the valuations are expensive when you compare it to a 5-year average. Ironically, FIs who were left out for the first 11 months of the year came running back in or marching in the month of December. We're going into a period where you've got earnings and you've also got crude. That could be the joke in the pack. How are you feeling? Is it a buy on dip market? Is it waited out? Or are you going aggressive even now?
So let me give you a data point. The data point is, if in 2008 at the peak you would have invested in the small cap index, you would have just made 9% return. over a period of 10-12 years, where the risk on the small cap side of it was huge. So over the last 8 to 10 months, we've seen the small cap index, the small cap stocks doing extremely, extremely well. There's a little bit of froth that is developing in the market in the sense that the valuations have expanded and the earnings will come back-ended. So my perspective to everybody is India is going on a path which it has never gone before. Manufacturing is coming into India as it has never come into India. Defense indigenization is coming into India as it has never been. So we are on a path which we've never seen before. But at the same time, the valuations are extremely, extremely punchy. A lot of money is chasing too few stocks in the market, and therefore you need to be very, very stock specific in 2024. I view this rally as a point where if you have got not so good stocks in your portfolio, you can exit out. I was just talking to an investor yesterday and he told me that I am looking for a return not less than 25 to 30%. So the perspective really is the return expectations have gone up, and consensus is a very, very dangerous word in the market, and everybody is bullish on India. And if that happens, the market at the same time can show a correction. So my perspective to every viewer out there is look at your portfolio, don't buy at any valuation. Indian story will continue for the next 10 to 20 years, but don't be too greedy chasing returns.
Greed is what we need to keep at bay. But yes, both our analysts believe caution, consolidation, a small correction cannot be ruled out in the next couple of weeks of trade, or in fact in the next quarter as well. We'll take a break. We'll come back. We'll continue talking to our guests and of course track pre-open as well as we gear up for trade this morning.
All right, back with India Market Open right here on NDTV Profit. About 3 minutes left for the markets to kickstart trade. We've established that, since we can't predict, and by the way, you should read that piece that Dr. Narayan has put out on ndtvprofit.com. Let's not wait. Let's not try and time the top. Let's wait for the top to show itself. Let's talk about specific pockets of strength or weakness. And Dr. Narayan, I'll come to you. The last 2 days, of all things, FMCG has started to show some spunk. Now, is this something that can be bet on from a trade/investment perspective? We'll do a fundamental call too, but technically.
Well, I would put it this way that FMCG was actually dragging, in terms of sector preference for quite some time during this advance. And it was largely restricted to financials and automobiles and all that. And so the sudden spike in FMCG is not really a surprise, number one. Number two is towards the end of the year, we always have this slight readjustments in mutual fund holdings for what's popularly known as NAV running. And these stocks are highly owned by all the funds, without exception, I would believe. And that can be attributable to it. Third is, in a market which is largely being driven by very high momentum, people would like to base their buying, fresh buying, always on stocks which the pedigree is not up to question. You may have, an IEX going up, or you may have some other go-go stock moving up, but people's sense of confidence in them is little lesser. But at 21,500, close to 22,000, when you suddenly get a very well-known name, a Colgate-Palmolive suddenly breaking out to all, new highs, all-time highs, or a Titan which has always been moving and also gets to new highs, there is a great deal of comfort in buying into all this at high price levels. So people don't hesitate, but they buy into this. So that also I would put as a part of the reason. So it's a mix of everything.
But you're not constructive there, from a trade perspective?
Well, I think in a market at 22,000, there will be very brisk or frequent kind of sector rotation, because people are having, fear of heights. So when they see money, which they do because there is a high level of momentum, and they are prone to taking off that money and then shifting. Now, if you're asking me across the year,
no, I'm asking for immediate trade.
Yeah,
sorry.
Immediate trade. You just follow the momentum.
The Tata Consumers or the Colgates, etc.?
I am.
You are.
I still am, because there is momentum in it, and see, momentum generally runs in short bursts. So momentum is never a sustained kind of activity. So in that short burst, you must kind of dive in and take advantage, and then step over and see where the momentum is shifting. So I think that is currently happening to FMCGs.
I want to just get a quick word from Aditya, and we've seen the pre-open steadying over there, at least positive so far, but we'll wait for that to settle as we see the first bout of pre-open rates coming in. I actually want to bounce off something that CK wrote on his column about how fear of heights has set in. And you're seeing that in WhatsApp forwards, you're seeing that in social media posts, that now the big crash is coming, that conversation's been going on for the last 5 to 6 months. That fear of, 22,000 plus, and then what happens? How are you reading it? Are you entering into 2024 on the sidelines, a little nervous, or very confident that the way is up?
The great legendary investor Warren Buffett says this, that in the short term, only two people know what happens. One is God and the other is Lio. My perspective on the market is very clear. We are very, very bullish on the market. We will not go out of the market, but we will continue to remain invested in very high quality franchises, and we will continue to do, if we were doing research at 1x level, we will continue to do research at 10x level to make sure that when the next correction happens, we are not shaken down out of the market. So the perspective is, I want to tell all investors today who are watching this show, stop worrying about the near term. In the near term, as money chases stocks, the up move will be very, very big, and the down move also will be very, very violent. So from that perspective, corrections are part and parcel of life. You don't have to just worry about them. If you are investing today, the only thing that you should be doing is that your time horizon should at least be 3 to 5 years, and your return expectations should be very, very tempered over 2024, because your returns right now have been really front-ended. So from that perspective, a little bit of caution is required, but you must not stay out of the market. The upcycle will be very strong.
But you of course, long term, that's absolutely right. But as of today and now, your pre-opens just started. People are watching this and wondering, what the day is looking like. What is on your radar today?
So we are looking very, very aggressively on financials right now, because we feel that the cycle has elongated with the regulator coming in and stepping in to stop all the bad loans. So over the next 3 to 5 years, financials, in my opinion, will do really well. And in 24, a sector to watch out will be the large private sector banks, because they've not done really well over the last 1.5 years. The other sector that we are closely watching are the chemical space and the pharma space. That's the only two sectors which has been really beaten down. So from a sectoral perspective, those are the 2 or 3 sectors that we are watching out really for.
CK, what about you? Your top trades today?
Well, top trades for the day would, I just mentioned some time back, IEX. See, top trades for the day always has to be seen from the perspective of momentum, right? Or if there is some news flow. Now, in the morning when I saw the papers, there really wasn't any specific stock.
BHEL was one that...
yeah, BHEL has been in the news, and that's already having momentum. So anything additional is only going to help. Right? So same is the case for BEL or BEML if you want to have rhyming stuff. Yeah. So you have momentum going in several areas. So I think IEX is something which has just picked up kind of new momentum. And I would believe that's a good stock to play for the day. And it has sufficient room to the top side. I think it closed somewhere around 169 on Friday. And I would believe some 180, 185 across the week should be possible. And it's also a fairly well-traded stock, fairly popular, active on the option side. So it has all the right kind of mixes. So I think it should do.
Okay, interesting. So IEX and some PSU names. But speaking of PSU names, we just put out a flash a minute ago that sources have told NDTV Profit, and this was a story that was likely to pan out on Friday, that NLC India was going to give out an order to either BHEL or L&T. Now, sources tell us that the order has gone to BHEL. This was a story that was published by a couple of dailies on Friday as well, and that's why we had highlighted at the start of the trade setup as well. But now we have sources telling us as well that this order is confirmed. Anushi joins in with an update on this particular piece of news and what would this mean for BHEL. Anushi, I'm swapping tracks from stocks to watch to BHEL because there's a flash that is running on our channel right now. Tell us, what do you know about this and what could it mean for BHEL?
Absolutely. So if you look at BHEL, that has outbid L&T for rupees 19,422 crore for the NLC India contract. This was in the context of building a thermal power plant at its Odisha. With now, if you are going to the project details, the BHEL will be responsible for building 3 ultra supercritical units of 800 megawatt each for the NLC, and with this there is another fourth unit as well of about 800 megawatt. So that is to be tested whether there is a separate tender for that or not. If you look at BHEL's order book, that stands at about 1,14,425 crore, and if you have to consider the H1 FY24 annualized revenue, that shows about 20,000 CR. So that shows about 5x order book 5x order book to sales ratio, showing good near-term revenue visibility as well. Now, other than that, there are also reports, or Nuvaba report, wherein it is expected that it might be added to the MIC index as well. So that is all of BHEL for today.
Rishi, thanks for that. So maybe an MSCI addition, a large order win, decent book to bill ratio. But Aditya, you have to say, fundamentals which aren't exactly great. The last 2 quarters, their operational metrics have only worsened. And the stock has done really well. So do news pieces like this help or make you believe that BHEL is a stock to own or no?
So BHEL was available 2.5 years ago at just 20 rupees. Now it is at 200 rupees. All PSU companies are great companies. But in 2020, the consensus was that PSU would not make money and investors should not invest in them. Now the consensus is that PSUs are great companies and you should only own PSUs. So my perspective is very clear. Consensus is a very dangerous word. And today, a lot of re-rating of the PSU companies is already done now. It's behind you. If you have already these stocks, you can hold on or book some profits. But I will not enter any PSU company right now because the valuations have run up 2x, 4x, 5x for all of these companies. No doubt great companies, great franchises, no franchises like a BHEL, BEL or something of that sort. But the theme from a market cycles perspective is done, and people should be really, really careful and not expect a 10x from here on. So careful not to bullish on any of the PSU companies right now at this stage.
Just a quick mention, and these are stocks that are eye-catching, and RailTel is up 15% in pre-open trade. Of course, it'll be exciting to see what happens when the counter actually opens up in market opening. In pre-open trade, the stock is actually looking
No, it isn't.
It isn't.
It isn't. But, you know, I want to
You're bullish on PSU, Samina.
Clearly I am. 75% run up, and now, of course.
I just want to get Aditya's view on rail stock, since you talked about RailTel, and we're going to play out an interview. So I had the opportunity to speak with the rail minister over the end of last week and understand from the other side what the ambition is. And it is, I think, bigger than we have really, fathomed in the public space. The kind of 100% electrification, what does that mean? They've launched 2 Amrit Bharat trains, they want to make 300. What does that mean? Now, I just want to get your take on the clutch of stocks which have run up massively in the railway space. Do you think that vision is priced in?
So the perspective is now, as you said, India is 90% electrified. We are making indigenous Vande Bharat trains, Amrit Bharat trains. The only way to develop this country is to invest in railways, and the government is really doing it. As the rail minister said to you, 2.6 lakh crores of capex is lined up. So the perspective is railways.
Per year for 5 years.
Exactly. So the perspective is railways is going to do exceptionally well over the next 5 to 7 years. This is the Prime Minister's vision. That is, if the country needs to get developed, railways need to get developed big time. But from a stock valuation perspective, let me give you an example. IRFC, which finances the entire railway wagons, was available at about 0.8 times price to book 2 years ago. Nobody wanted to buy that stock. Now it is available at 3 times price to book, and everybody wants to buy that stock.
But Aditya, that would be true for most PSUs, right?
Correct.
Defense, PSUs.
Correct.
Titagarh was not nobody wanted to buy it at 50. Now everybody wants to buy it at 1,000. So is that the yardstick you will use, or are you looking at the future?
So my perspective is, even in the future, a lot of these earnings are now starting to get priced in.
Okay.
Now, as the great fund manager Narayan says, India is a fantastic market from a growth perspective, but the valuations are already starting to price in a lot of those things. So you need to be very, very careful on the bets you really take. And if by chance these companies fail to deliver even in 1 year, the market will not be very kind, because money will start to move out from those stocks and move into stocks where performance is there. So now you need to be very focused on the execution of these stocks. And the other fact is how the government releases the payments for all of these companies, which is also still a very crucial factor that the market is really ignoring. So from my perspective, what I will do is, if I have those stocks, I'll book out 50% of that and see what really happens. I will not try to take any new entry into these stocks. A little bit of correction is something that is really warranted across all PSU companies. But yes, from a growth perspective, railways is on a very, very big boost.
Quick mention, we've got some of those auto sale numbers that have trickled in. So for Escorts, December sales are down 17% at 4,131 units. Exports also marginally lower this month. Bajaj Auto as well has reported its monthly auto numbers. 19% uptick is what I believe we're getting in for December numbers. CK, Auto Pack, I know early in the day the numbers are just rolling in, but like you said, tactical trading calls are usually backed by news or flows. On auto numbers, how would you play this space? Any long sort of calls that you'd initiate before we get some more details on numbers?
See, I think the 3 two-wheeler stocks, or 4 of them for that matter, Bajaj, Hero, Eicher and TVS, they are in the middle of a fantastic uptrend, and I think all of them have chalked up new highs, with the exception, I would believe, of Eicher. But Hero Motor, Bajaj and TVS for sure. So very evidently, these high prices that they have reached are not spooking out investors or traders, and everybody is happy to load up the truck even more. And good news, if it were to continue to play out this way, I think there is no reason for them to let go. And I would believe, therefore, the momentum in these stocks, particularly the two-wheeler stocks, ought to persist. Coming to four-wheelers, if you take Tata Motors, Ashok Leyland, etc., I think they are kind of running on different tracks. There's a lot more chatter and a lot more expectation from Tata Motors as compared to Ashok Leyland. So I don't think, even though if you want to look at the commercial vehicle space, and then I would definitely bet only on Tata Motors right now. Their EV segment has done substantially better than most people expected, and there are also other set of talks which are there in the market which is driving the stock. So this is where I would focus two-wheelers more than four-wheelers right now.
Which ones do you like among the two-wheelers out of TVS?
I think Hero Motors doing the best among the lot, followed by Bajaj and TVS, of course. All the three are kind of moving in tandem, and they're all consistently punching out new highs. So there is a lot of money chasing them. So as long as, whether you're doing fundamentals or you're doing technicals, there is this saying by Charlie Munger, I think, who said, don't interfere with the compounding process. Now, that is very true when you're doing long-term investing, but I think it is equally true when you're doing shorter-term trading. In the shorter-term trading, you're looking at trends which are assaying, right? Don't interfere with the trends. That's a simple logic that I would put here. So right now, all these two-wheeler stocks are in tremendous trend. Why do you want to put a halt to it? Just just be part of it. And like
stocks, so Sona, BLW.
Please, because there are so many of them.
Right. Okay, CK, give me a minute. We'll come. 13 seconds. We'll come back to you. Niraj, over to you.
Yeah, just 10 seconds left for the markets to kickstart trade. So we'll continue that conversation. By the way, CK Narayan has a tremendous hold on the railway stocks as well. So we'll take that view from him. But here's how the markets are starting off. The first day of the new calendar year. Well, on a flat note. So I must say the implied open, the SGX, the gift, whatever they indicated, the start is anything but that. Is this a precursor of things to come in 2024? That remains the question. Let's pull up the banks and see what's happening there. 90 odd points. Maybe this is just a low volume beginning. Let's wait and watch if this perks up. But for now, it's flattish. Mid caps about 0.25%. Small cap index will come up next. And let's see how the start is. Well, 0.4%. So this is actually following the template of the last few days, wherein the broader markets are doing much better at the beginning than the large caps are, even though the large caps have done better during the close of the day. Bring up the heat map and show you what's moving and what's not. So, yeah, a little bit more red than green. So let's mark the losers first. Actually, not too much. Bajaj Auto, iShares. Strangely, autos are not starting off on a great note. Mahindra and Mahindra too. But it's nothing dramatic. Just about 0.5%. The top loser, Axis Bank, is 0.73% lower. But that is to be anticipated on a day when the markets are about 0.1%. What's gaining? BPCL up about 1%. Coal India. So the two PSUs line up. And FMCG is not having a bad start. Nestle is up 0.6%. I saw ITC in the top 10, top 11 names as well. Okay, it's now changing, but ITC was in the green too. There is some bit of more consumer element in Britannia and Titan as well. So Titan is not strictly FMCG. So that's the long and short of it. Even Stevens, no great movers. Maybe a bit of FMCG flavor and a bit of PSU flavor in the large cap end of the market. Tamanna, what about the broader end?
How the Nifty and the Nifty mid cap and small cap are doing. So you are seeing a more positive trend over there as well. And we should just pull up that index as well before we go to the individual stocks that we've picked out. So there's definitely a better breadth over there. We've spent the better part of last week with all of our experts saying mid caps is done, focus on large stocks. At least the first few minutes of trade shows that the mid cap and small cap excitement is very much there. Okay, let's pick a few counters that have had news flow. HFCL. Let's start with HFCL. They've gotten orders worth 1127 crores. That counter up about 5% in trade. It's an order for supply of equipment services on turnkey basis across India. No more details than that. But they have to execute it within 18 months. So there's a clear timeline there. Eicher Motors has got a demand, tax demand worth 130 crores. So a little bit of subdued focus over there, though we'll have to wait and see what those auto numbers are telling us in a complete scenario. I'm going to pull up NLC and BHEL. BHEL has been, on top of the news because of quite a significant big order, 19,000 crore contract for the Talabira power plant from NLC. So that's talk about 3.5% up in trade. And I'll just talk about Dalmia Bharat. So there was a Motilal Oswal note out on Dalmia Bharat, which has said it's their top pick of 2024. That's talk about 2% up in trade. Only Imami now on my list. That also had a note from MK today. And they are pretty bullish on it. So not too many moves, I would say, in opening trade, Samina?
Yeah, not too exciting this morning, Tamanna. It's a quietish morning, but a few stocks that are catching my attention. So you've got Dhampur Sugar. Pull that one up. They've notified the exchanges that the board will consider buyback of shares on 3rd Jan. Railtel, so that stock is up about 4.5% odd. We talked about Railtel in pre-open. We couldn't pull those rates up for you, but the stock is doing really well. A 5% rally on the counter is what we are seeing on a relatively subdued morning. A couple of other stocks worth a mention on the exchanges that are moving just a little bit is smaller in nature, but still not looking too bad. And I think Tamanna has mentioned a few of those. Largely speaking, it is a quiet morning. You've got Jubilant Pharma that's up 5%. Railtel I've already mentioned. KSCL is up 7%. JBPM is also up with a 9% rally. Well, a few others. The FMCG, in fact, Nifty FMCG has hit a record high at 57,165. Radico Khaitan and Imami are the top gainers in the sector right now. So all in all, it's a quietish morning. Auto those stocks will be in focus. You've got a few counters that are talking about a stock split, so there could be some activity on stocks like Nestle, All Cargo Logistics, which will do its bonus share. So those are counters that will move on back of news. All Cargo Logistics, another morning, another big gain, 3%, 2.5% higher on All Cargo Logistics is what we have. So all in all, it's quiet with a few counters that are seeing some activity, but CK, I'll come to you first because I think Niraj, just going into market open, talked about you having a pretty good grip on the railway stocks, and Railtel today as well seeing a very pleasant morning. So from all of the names, what counters in the rail sector? So give us 3 to 4 stocks you would bet on, and this doesn't have to be a tactical call, right? Strategic in nature. If you don't own any rail stocks, which ones should one buy today?
See, I think Railtel, one of the reasons why it's really kind of spiking is it has this technology mixed into it. Right? It's a railway stock with the background of technology. And I think for that aspect, there are a lot of takers for Railtel. And it has been, see, I would think if you leave aside the wagon manufacturer like Titagar and all those which had a very superlative up move, and maybe would want to take some breathers or maybe out of whack with valuations. Other than those, the rest of them have been going up pretty gradually. Nothing very serious in terms of a runoff, whether it is Railtel or IRFC or Ircon or any of those names. So I would buy into dips in the wagon manufacturers because everywhere in railways, like Aditya just explained, there is going to be some amount of continued bullishness and persistence of demand in whichever way. So that is also getting reflected into all the charts because there is no indication of any weakness. But markets go up with hesitations and then again fresh breakouts and all that. So I would first believe that that may happen to the wagon manufacturers because of the very superlative runs that they have had. But in the other stocks, I think there is still a great deal of juice left, and like you're seeing in Railtel. And I would still be a buyer in Railtel at these levels also, and pick them up at any pullback that we may get across the month. Ircon is another one that I would definitely look to be a buyer in. IRFC, maybe not. If it gives me a nice dip, then I might take a look at it because that's been kind of lagging the trends of the others. So my focus is, what is trending and is there a tailwind from any kind of news. Now, railways is in the sweet spot of having tremendous tailwind for the past more than a year. And the news tailwind doesn't seem to be going away in a hurry at all. So
not at all.
Why exercise your mind too much? Just be with the...
No, so I would urge, viewers to watch the first half of the interview that we're putting out at 10 this morning with Ashwini Vaishnaw, the Rail Minister, because the perspective is much larger than has been absorbed so far. First, the 2.4 lakh crore rupee budget outlay was one of the largest for the railways. The problem in India usually is even if you get a budget, how do you spend it? So they have managed to spend it. They're saying 77% is done. By March, 100% will be done. So that money is going into that sector. It's going to continue consistently. But I just want to play out a small clip of my conversation with him where I ask him that you have the vision, you have the money, how will you execute it? Do we have the wherewithal, the know-how within the country to execute these projects? If you want to 100% electrify, you want to create new kinds of trains, etc. Let's listen into what he said. What is then the capex for the coming year? Because the
we should maintain this level. 2,40,000 crore is a very optimal level. Anywhere between 240 and 260 is what we should maintain, because when we do work at this level of this quantum of work we do, we should continuously focus on quality of work.
Okay, so we'll play out that bit also in a bit. This was on the capex, but when we asked him specifically, and which is what's been playing in our promos as well, on what he can do, he's saying that we are not only gearing up, companies are gearing up to understand and build this technology, but are going to be exporting it as well.
You know, the interesting thing though, and people will watch the whole interview, I'm sure, but the interesting thing that stood out for me in one of the bites that we played, that he told Tamanna that the same powertrain that powers the railway locomotive will power the submarine. So our view is about what trains or might do, but here's what train companies are making, not just for the railway sector, but for sectors beyond as well. And that's quite stunning, really. So that'll be interesting to see. But so that's an unmissable interview at 10 a.m. We also have, by the way, a very large interview at 9:30 with ABB. Yes. So you need to tune in for that as well. But quick opening thoughts on some other things which have moved today. Aditya, power has been in focus. Friday, me and Samina were talking about a strange arbitrage opportunity in Inox Wind and Inox Wind Energy. Inox Wind Energy is up 5%, Inox Wind is flat. But that notwithstanding, that whole space, Inox, Suzlon, power financiers, PFC, REC, etc., is there still some juice left fundamentally?
So fundamentally, what is happening there is the government is coming in making massive changes in the power sector, how it operates, how the power producers are able to monetize the power that they get. So point number one that we need to understand is the whole sector dynamic is changing. Together with that, on the renewable side of it also, the government is trying to get more producers into the renewable side of it. So in my opinion, the long-term view on that sector is really very positive. Companies like IEX, where I am very, very bullish on over the next 10 to 15 years, those are the companies that are going to do really well. What you need to really concentrate on the power sector is bet on companies which have really strong balance sheets. So they'll be able to withstand the down cycle if at all it comes about. So very positive, and on the power sector per se, and positive on companies like IEX, Tata Power, and also on renewable companies like KPI Energy and all those sorts of companies. Need to really concentrate on the renewable sector. That's a big theme that will play out in the next 5 to 7 years.
Okay. So, just 10 seconds here. No, there seems to be a consensus on IEX part one. The only anomaly out there could be if Dalmia Bharat goes out and sells its stake in IEX, then that might be a bit of a near-term challenge if overhang.
Dalmia Bharat, the stock is actually up 3%.
Oh, it is.
Today. So it is one of your top movers in the broader markets is Dalmia Bharat. CK, very quickly, we're to ask you for two stocks from specialty chemicals because we're assuming that sector has been neglected and everyone's talking about how it might come back in fashion in the next couple of months. Any two stocks that on the charts look, tempting for you in the chemical space?
Well, first up, I'm not so bullish on it right now because it's only in very small pockets that is happening. Wherever some particular chemical or whatever the process they are doing, wherever prices have looked up over there, that's the only stock which is going up. But over the period of time, specialty chemicals has really become a very, very wide sector, catering to so many different aspects. So I'm not seeing a sustained fund flow into that sector as such. So it has to be very specific, and since I'm not really, putting money into that right now, I'm not looking at the ones which are gaining either, because I don't think there is a big tailwind to the sector. It's just for an individual stock.
Right, we're unfortunately out of time, but CK, Aditya, thanks a ton for joining us in the studios. Happy year, and may this one be a profitable one, if not as much, but more than 2023. Thank you, gentlemen. Great having you guys on the show. In the meantime, the street is quiet, consolidating, so more or less in expected lines. No major fireworks on D Street on the very first day of January 2024. We'll take a quick break, but we'll bring you a very special conversation with Sanjeev Sharma, MD Country at ABB India, on his outlook for 2024. And at Talking Point today, Ashwini Vaishnaw, Railway Minister, who had an exclusive chat with Tamanna on the other side.
Thanks for tuning into Outlook 2024, a series where we're talking to some of the tallest leaders in the investment and the business world to try and understand how do they look at the next 12 months, arguably the next 12 to 24 months, if you will, whether from a business perspective or a businessman or an entrepreneur's perspective, or from a perspective of an investment professional. Our guest today on the show is Sanjeev Sharma, Country Managing Director of ABB India. And ABB, as you all know, has just had a phenomenal run, not just on the bourses, but also in terms of the business that they have done and the plans that they have unveiled in various conversations with analyst community and the media at large. Sanjeev, great having you. Thank you so much for taking the time out for this special show.
It's really nice to connect with you again, Niraj.
Yeah, the pleasure is entirely ours. Sanjeev, as we end the year and what has arguably been a successful year for you guys at ABB and you at the helm of the business, I want to start off with the broad macro first. What are your thoughts on the investment cycle in India and the world, and what is in store for 2024?
So we have had many interactions before, and if you go back to the storyline we have been painting for last 2 to 3 years, I think nothing changes. We see a very positive market in multiple market segments going into 2024. And we see that there is a lot of commitment from the government to spend, the capex. And we see a formation of the market, which is multi-tier. One is that it is expanding into multiple market segments relative to past. And also it is growing in multiple geographies across the country in tier 2, tier 3 cities. So with that formation, I think we continue to see growth in our portfolio of 18 business lines. And we find that continues in 2024.
Okay. As you enter 2024, Sanjeev, are you a lot more sanguine about business prospects than what you would have been at the end of 2022, getting into 2023, if it's possible to jog the memory far back then?
Yes, I think if you go back a couple of years, we were coming out of COVID, so there was a bit of a pent-up demand at the time. And I think that is something we picked up. So a few quarters represented that. But after that, all the good decisions taken by the government on the monetary and the fiscal policy and how they manage the policy framework, monetary framework, as well as how the distribution, across the country is organized, I think that started showing up in the growth. So I would say now it is the genuine cycle in the industrial portfolio that we have, wherein there's a much widespread growth. So I would say compared to 22-23, when we are moving into 2024, we find that it is built on a much